Poet Technologies announced on January 23rd that the warrants issued in connection with the financing that the company did in February 2021 was approved by the warrant holders. Joining me to discuss that news is Kevin Barnes, the company's Vice President of Finance and its Treasurer. Kevin, welcome. And since this is your first time in one of our interviews, which we've done over the past year with Poet's senior management team, I think our audience would like to learn a little bit more about you. Tell us, how long have you been with Poet, what your role has been over the years, and what your responsibilities are as VP of Finance and Treasurer.
Well, thanks for having me, Adrian. It's good to be here. Well, this has been quite a journey for me. Interestingly enough, I've been the longest serving member of the Poet team. I joined the company back in 2007 when we first went public. I've really had a front seat view of the company's evolution over the years, and been with different people, seen different people as they came through the company, and the group that's helping to shape the vision of the company as we see it right now. Very early on, I was a consultant with a company, and then I served as the interim CFO while we restructured as we transitioned from alternative energy into photonics. And then after Tom Micah joined the company, I moved back into that natural role as the corporate controller and treasurer. And for the last couple of years, I've been serving as a VP of administration and treasurer. And, the role that the VP of finance really serves, my job is to align the operations of the company with the finances of the company, bridging that gap, making sure that we have sufficient capital to fund the operations. And, last but not least, I serve as Tom's right-hand man. So we work quite closely together.
And I know Tom really appreciates that work you do. And rumor is you're also the best golfer on the Poet team.
That's a rumor.
Yeah, so you definitely have a unique and long-term perspective on Poet. For those in our audience who are not familiar with warrants, let's get to the topic of today. Can you give us a brief primer about what they are and why a company uses warrants in connection with raising capital?
Well, warrants, they really serve as a sweetener for an overall deal. When a company goes out to try to find capital, whether it's through a public offering or a private placement, warrants typically serve as that additional motivator to have shareholders invested in the company. And it encourages investors to buy back shares of the company. And the good thing about warrants is that because they're typically built into the cap table once they're issued, then it doesn't serve as much of a dilution to the company when we have financing taking place through warrants. So when the warrants are being exercised, we don't get too much dilution because it's already baked into the capital of the company. We've had warrants over the years, and I must say that Poet's been very effective at managing its warrants over the years. Since I've been with Poet, we've only had one batch of warrants that's ever gone unexercised. So we've done a pretty good job at utilizing those warrants for helping to finance the company.
And I understand that for this batch of warrants that you applied to the Toronto Venture Exchange to allow Poet to both lower the exercise price and to extend the exercise period, is that correct? Those terms are now in place?
Yes, that is absolutely correct. The exercise price of these warrants, they were set back in 2021 when we did that financing at $11.50 now, 50 cents. Now that takes into consideration the consolidation that took place. Now, since then, and especially since the beginning of the last year, I mean, you've seen what's happening with the markets. They've been extremely volatile. Prices of tech stocks have been the hardest hit of all the different sectors. And so we just felt it was appropriate to apply to the exchange to have the price of these warrants actually lowered and amended. So at the time we were trading about $4, and we asked for an amended price at $4.25. So those warrants were scheduled to expire on February the 11th of this year. So given the volatility in the markets, the bleak market sentiment, the global economy the way it was, we just did not feel comfortable that we would have achieve that price of $11.50 within within a few weeks. So we applied to have them repriced at a more reasonable price for our shareholders and our warrant holders, and then also to extend the date so that they could have until the May 2023 to exercise those warrants. So, there are some mechanics and some regulatory rules associated with this. We had to get a supermajority of 66 and 2/3 of the warrant holders agreeing to this modification. We had to negotiate with the warrant agent to get it done, and we need new QSIP. So all of this is a process that really took place, but we're confident of the success of this.
And now that the company's shares are selling on the market at prices higher than the exercise price, do you regret resetting the price at $4.25 Canadian dollars?
No, not at all. Not at all. Being able to raise capital at $4.25 per share without having to offer additional warrants is much better than we would have ever been able to achieve in a public offering or a private placement. So these warrants, as we said, it's already accounted for in the fully diluted share count. So there would be technically no additional dilution because shareholders have already recognized this. And then, when we take into account the volatility of the share price, we've seen it move from $1 to, over $2 in a single day. So we really need consistent and steady trading so that the warrant holders are encouraged to exercise these warrants and purchase these shares.
If all of the warrants from the February 2021 are exercised, how much cash does that bring into the company?
We've been looking at, right now we've got, just north of 1.7 million warrants. So if all of them get exercised, we'd be looking at over 7.5 million Canadian coming into the company.
And how many months of the company's operation does that 7.5 million cover?
Utilizing our current burn rate, we'd be looking at a good 6 months. So when you combine that with the small offering that we did back in December and cash flow that we have carrying over from the prior year, then we feel that we are in a position to push out the need for any additional financing in the near term.
Does POET have any other batches of warrants outstanding?
Yeah, we do actually. We have just over 1 million warrants associated with that debenture financing we did back in 2019. And those warrants, they begin to expire in April of this year through to September of this year. And those are deep in the money. So we're encouraging the warrant holders to exercise those warrants also. Most of them expire between April and June of this year. And, if we get all those warrants exercised, we're bringing in another $5 million of capital to the company. And on top of that, we also have that private placement that we did early December, which has another 560,000 warrants associated with that at $4.95. And if we get those warrants exercised, we're talking about another $2.3 million. So if we combine all this financing opportunity we have through warrants, you're talking about upwards of $14 to $15 million that could potentially come into the company. And this is great financing opportunity for the company without providing that additional dilution.
And that gives us, I think, an operational runway of 12 to 13 months. Gives our engineering team lots of time.
That certainly does.
Yeah, that's great. So, anything else that's outstanding out there that can really bolster the bottom line?
Yeah, we also have stock options that directors and management and other employees have the opportunity to execute and exercise their options. And if we have gain access to those warrants, we're talking about those options. We're talking about over 5 million options. So the exercise price of those options range from as low as $2.80 all the way up to $11. Now, they're not all in the money, but if the ones that are in the money, if we can exercise those, then we can gain access to another 15 to $20 million of capital, which gives us even that additional amount of runway without having to go back to the market.
Company is in solid position on that end. Now tell us I guess there's a question with the warrant holders. Those who sell the shares they currently hold in order to fund the purchase of the lower priced warrants, how does the company feel about that being a possibility?
You know, we recognize it's a reality. We hope it doesn't happen. We don't ever want the warrant holders to do that. But we understand everybody's in a different situation. Not everybody's got that dry powder. And so it might happen where some warrant holders might have to sell shares to create the capital to exercise the warrants. But look, Adrian, we're focused on the big picture, and the big picture is overwhelmingly positive. This includes the exercise of warrants coming, which creates additional capital coming into the company. We're poised to receive millions of dollars from that in effectively non-dilutive financing. And then we've got the commercialization of our products. You think of the news releases that we've just done, talking about the different products that we have, the acceptance by customers of these products. So it's an exciting time, and we're focused on that. So we're figuring that news, that energy will absorb any of the selling pressure that might come from individuals having to sell shares to exercise those warrants.
And we can't let you go without, I think you hinted at it there, telling us what you think about the future of POET, and especially as someone who's been with the company for so long, and as you told us at the beginning.
As I mentioned, I've been here for a very long time, and so this is the most exciting that I've been with the company. I mean, we're right on the edge of the new phase of the company, and I must say I'm privileged to be a part of this. I get an opportunity to be sitting there in the front seat with everyone. I get goosebumps just thinking of what we've got going on, especially looking at how we have progress on a shoestring budget. I mean, absolutely small amounts of financing available to us, and we're able to accomplish this. So this is exciting for me. These are uncertain times for markets and the tech sector in general. Yet at POET, we're extremely bullish, and I'm extremely bullish for this future. And I would be remiss if I don't mention the fact that since I've joined this company and I've seen how close we've gotten to commercialization, we've got two extremely good leaders in Suresh and Vivek. These guys are the absolute real deal. They're first-rate executives who bring a certain experience that you just don't find everywhere. And they are key to taking us over that hump, taking us to commercialization. And believe me, I am committed to 2023, and I'm excited about it. I look forward to what's going to happen this year.
Yeah, and our January is off to a flying start, as you inferred, and obviously Suresh and Vivek are working really hard. The entire team is working really hard on delivering for our customers and for our shareholders. So thanks so much, Kevin, for taking the time for explaining in detail what this warrant situation is. And for those of you looking for more information on the company's finances, visit the POET website for corporate presentation, press releases, and more videos.
Thanks for having me, Adrian.